Welcome back. You're watching Earnings with ET now, and with me is Shekhsare, who is the CFO of the company, and Sudeep Konamal, who is the VP and CHRO of the company. Samir, to start with, you've been able to maintain your EBIT margin at 25.2%, but when I look at your EBIT, it's slightly lower than expectations. There is a one-off in your P&L. Can you explain that one-off?
So the excluding one-off EBIT, as you rightly called out, is at 25.2%, and they have remained stable despite of the typical Q3 seasonality, and that has been offset through overall productivity and workforce optimization gains. As you rightly called out, if you look at the reported one, there's a difference, and there have been three exceptional headwinds which have been there, and we have called it out in our financials as well as fact sheet. The first one is the implementation of the new labor code, and we have implemented basis the guidance, the overall implementation of the code, the guidance which we have received from our consultants, and on an overall basis, that's about 2,100 crores on EBIT. Also, we got an unfavorable opinion or decision on CSC. We have taken a provision of about 150 million onto the P&L out there, and the continuing effort on the workforce rationalization out there, it's about 250 crores. So all in all this put together is about 3,300 crore on EBIT.
Just to get in clarity, Sudeep, he spoke about the labor code impact which has come in, and I assume that it will be there for all companies because it comes as a surprise because the SOPs are not out, the guidelines are not out, but you still gone ahead and taken that decision. Can you just elaborate what exactly it is?
See, now, if you look at the new labor code, as you know, which came up in November 21st as an enactment, and the draft rules are now published as of end of December, there are certain guidelines that have come both through this enactment and the labor rules. Now, to like what Samir just said, we have discussed with all our consultants, and to the best of judgment, to be fully compliant, we have taken this provision. But as the rules is under consultations and then the government formalizes, we will again go back and review and see how we need to be adjusting this and taking a final call. But this is based on the current advice and understanding of the current draft rules that is in place.
One more thing which is there is the employee separation cost which has come in as well. Is the entire process over now because you started this the last quarter and it was supposed to spill over to the next quarter as well? Is it completely over or will it take a couple of more months?
The foremost I want to tell you, see, this year, this quarter, again we have hired considerably in a good number, or close to 16,000 people that we have hired. So our investment to continue to hire continues. Our building on capability. For example, I'm very happy to say that Everest Matrix ranked TCS as the industry leader in future generation skills, specifically AI, data services, machine learning. So we ranked as the number one. So all our investment that we were talking about learning continues to sort of be embraced by our associates, and it is seeing great return to an extent that our people with deep skill AI has actually 3x compared to the data that we had for the last quarter. So all these things are continuing. The restructuring that we part of, we said we will do it through the course of the year. So they are continuing, but it's a substantially much smaller number that we have done. It's approximately around 1,800 people that has happened in this current quarter.
And how much more is left by the end of the
No, we don't have a number. See, exactly. See, we don't want to do any, if you ideally ask us. So it's part of a process that we are evaluating everyone to be future ready, and wherever we find genuinely after all the effort that we put, and like what I said, all of them are embracing the learning and investment, where we are able to see that people, there is no future deployment opportunity, is where we take this call.
Samir, it was a quarter where currency depreciation happened that came as a tailwind for you, especially US dollar. 2% quarter-on-quarter jump in for the dollar in this quarter. You had the wage impact, which came in for 2 months, if I'm not wrong. Then you have the separation cost, which is the minimum gradual one, which is there. Can you just take us through the margin picture? 25.2% EBIT margin. What was the kind of mix for what went in favor of you and what was against, and how you managed to keep it at 25.2%?
Sure. So overall, as I said, overall margins were stable at 25.2%. We had a benefit of 80 basis points coming in from productivity, pyramid optimization, as well as operational efficiencies, and a further 20 basis points benefit from support for currency, like you talked about the rupee depreciation piece of it, and that was offset by 50 basis points from full quarter impact of the wage hikes which we gave effective 1st of September. So the 3-month impact of it coming in this period, and 50 basis points on investments and partnerships and brand initiatives. So that sums up the overall.
And is investments in partnerships and brand initiatives continue for you in coming quarters to the extent of that amount?
So overall, there could be some one-off initiatives, but the overall investments would be continuing across. The categories could be different, but we continue to invest on the strategic priorities which we called out in our analyst day also. So overall investments will continue.
You know, you Sudeep spoke about the fact that now you have 3x more executives in AI compared to last quarter. What is the kind of investment that you're making in AI so that you convert yourself into AI-enabled IT services company?
So overall investments, like we have talked about the 5 pillars during our analyst day as well. We are making investments on each one of it. Talent readiness is one big pillar, and that's where the associates which we talked about comes in. Investments on internal transformation of TCS continues. It is about also making our offerings AI ready, also helping our customers on the AI journey, and the new horizons which we have talked about. These were the 5 pillars. We're making investments across. We have called out, we are making about $1 billion investments on an annual basis on the P&L across these 5 pillars.
Sudeep and Samir, thank you very much for joining us today.
Thank you.